Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the markets. We'll look at commodities in a separate video in just a bit. We're going to look at SPY, IWM, QQQ, XLF, biotech, healthcare sectors, and the volatility index. Going to start on the longer term monthly time frames. Obviously, we've had further bearish reaction to the market. The SPY bears are in complete control at this point, and the news on Friday surprising the market a bit with the threat of 5% tariffs on Mexico. So it's the same narrative as far as tariffs go, but new information along those lines. I think the most important short-term event coming up is China's going to put out a white paper as far as their stance on the whole trade war thing. That's coming Sunday, and I believe that that's going to set the tone for what we see on Monday in the market. And it's very interesting to me comparing this action, looking at the monthly time frame right now, with what we saw back at the end of 2018. And it's almost the fact that we have a reason for weakness right now, that it's more contained in the sense that we're not seeing an all-out collapse, an all-out dump. There's short little bounces on the way down. And it's the kind of scenario where it's less extreme when we had no reason. And it's almost like that fear of not knowing why we're going down leads to a bigger pullback, at least if we're just comparing it to last year. In my opinion, there's more reason now for weakness than there was back at the end of 2018, but the stock market is not really reacting the same way. And again, it's just, there's fear. I'm seeing fear, but I'm not seeing the same kind of irrational fear, essentially. So we've been pretty contained in how we are pulling back, but it's clear that the bears are in control. So looking at it on the monthly time frames, we can say clearly that the S&P 500 is in an uptrend. And as long as we hold the low of December, the bulls will keep making some progress. So that is the benchmark. Bulls must hold 233.76 to form a monthly higher low. And how much we pull back is going to be important as to what we expect from here. So if we were to pull all the way back to the 250s, then we could anticipate that a monthly equilibrium and tightening range is the most likely scenario. If we were to pull back just to 270, and that would going to be a temporary bottom, then the odds of continuation for new all-time highs still remain. Of course, that seems very hard to believe with the current news cycle, but right now there's a lot of overnight headline risk, and the risk favors bears, and it certainly does not favor bulls. So it's not surprising that we closed at the low of the day Friday heading into the weekend, because over the weekend we can get any number of new headlines that negatively impact the market. Back when we were on our way up and at all-time highs, the headline risk was against the bears and it favored the bulls because we kept getting all this news. We're close to a trade deal with China. Everybody was waiting for the possibility that a deal was going to be announced and that would be a bullish event, but obviously that did not happen. Things fell apart and there was a clear shift on where the headline risk stands. So we closed at the low of the month. That does not happen often, and it's definitely a bearish month, but again, we compare it to the month of October and it's not comparable, and we compare it to the month of December and it's not comparable. So it's not there just yet. And in my opinion, we would have to see some kind of significant escalation of things to really kick in that fear. And looking at it on the weekly time frame, we've been pulling back for a month in a row now. And this 4 weeks of pullback, we've given back about 5-6 weeks of upside action, which is normally the case just as far as stairs up, elevator down goes, where it's much easier to pull back than it is to go up as far as the speed at which that happens. So the most important support level from here for me is 272.42, and that's the only thing nearby really, because if that support level is lost, you can see how fast on the weekly time frame we ran up on the December bounce without establishing support. Looking at it on the daily time frame. So we're not oversold on the daily just yet. If we gap down and get a second gap down open on Monday, then the daily RSI will just be getting towards oversold. There's our 272.42 level, which we are approaching. And around that level is when the daily RSI would begin to get extended. If I'm going to be looking for oversold bounces, which I talked about in the last video, and in terms of I like oversold bounce trades, they work well for me, I'm going to be looking for when the daily RSI is oversold, the 4-hour RSI, and the hourly. I want all three of those time frames oversold. And right now the 4-hour and the hourly are not really that beat up. So I would need to see a clear leg down, and right now that 272 target is worth watching, because if we were to drop to that level, say Monday or Tuesday, then we could get a scenario where all of these time frames are lining up oversold. And why I wait for all these time frames to line up oversold is because it's much more forgiving in general, I'm speaking in generalizations, but it's much more forgiving to get a short-term bounce when you make your initial entries and able to establish a game plan off of those short-term bounces. Because if we get short-term RSI levels so extended that we know at least a short-term bounce is coming, whether or not it's a daily bounce, we have to wait and see, but the short-term bounces allow us to at least put a stop loss in. So let's just say, hypothetical scenario, we drop down, gap down open Monday, dump real quick down to 272, 4-hour RSI is at 25, hourly RSI is at 23, just making these numbers up. But let's say I just make my initial scale and entry. Perhaps I have 3 planned entries. I'll enter at 272, I'll enter at 270 if we keep dropping on the daily with no bounce, and I'll enter at 268 if we keep dropping with no bounce on the daily, because if at that point, the daily RSI would be getting down into the low 20s. So if that's my game plan, and I make my initial entry, another strategy is, let's say I get in at 272, it drops down to 271.80, then an oversold bounce gets going. We know that oversold bounce is just going to form a lower high on the 4-hour time frame or the longer term time frames. But what I can do is then set my stop loss either at break even or under wherever that low was, and keep the risk really small. And if we get stopped out and we see another leg down, then that just frees up that cash again to give it another attempt for the oversold condition. So that's a strategy that I personally employ for my oversold bounces. And it's the kind of scenario where heading into each morning as a day trader, let's give Friday as an example. So Friday we had a gap down open, and it was the kind of scenario where I said, I'm either looking for a bullish setup or I'm not going to trade today. And the reason for that is because gap down open, oversold hourly RSI, daily RSI getting close to oversold. I personally don't like making bearish entries in that scenario. I favor bullish entries, but it doesn't mean I'm just going to blindly buy. It means I'm looking in that direction. If I get the setup that I like, I'll take it, but otherwise I just won't trade. And if I'm wrong and we just dump all day, then I was wrong and I lost zero money because of it. So we had the bulls show up with a little 5-minute equilibrium. And after the first 5, 10, 15 minutes of trading, we could clearly watch the financial sector, the tech sector, and the healthcare sector and say, okay, these are our 3 major players. I'm looking at the financial sector right now. If the financial sector does not hit a new low of the day from where we stand, the S&P 500 bears are not going to get significant follow through. Down here at the low of the day, XLF hit a double bottom at its low of the day and then held. So that helped us from looking at the bears to get too much downside. That being said, we also knew that if the bulls show up, we're just going to form an hourly lower high. So we're not looking for, any kind of hero bull move to come out of nowhere. We know it's going to be a shorter term bounce. We know we're just going to set an hourly lower high. And that's also another scenario for bears to patiently wait for a bit of a bounce after the gap down open to then look to establish an entry for that hourly lower high. And looking at the bounce on the hourly time frame from Friday morning, the bulls bounced, we topped out, and then we pulled back and closed at the low of the day. And again, not too big of a stretch to anticipate a close at the low of the day due to the headline risk that we have here over the weekend. So if we do see weakness on Monday, we'll be watching the 272 level, and we'll be watching the daily RSI. At this point, anything on the daily time frame under 280.04 is just a lower high as well, so bears can be watching for a daily lower high entry. We've had 3 of them now on this pullback, and the daily trend is not going to change in the near-term future. So IWM, we have a lot of setups, a lot of individual names, and a lot of markets that are showing us monthly equilibriums. This is the setup that I anticipated as the most likely for everybody, the S&P 500 included, as we started seeing a significant bounce from December. Now, the S&P 500 shocked everybody in terms of its V-shaped bounce back to all-time highs. I don't know how in the world it pulled that off. That is not normal price action for me when you see a huge spike in volatility and all this new price discovery in a range that quickly. The equilibriums are very, very common in that setup, which is why oil's doing it, IWM's doing it, biotech sector's doing it, financial sector's doing it. Most everybody is doing it except for the S&P 500. So in my opinion, I think the most likely scenario is for these time frames to form monthly higher lows sometime in June, July, sometime this summer, and then look to continue to tighten up into Q4 2019. And I do believe that that's the most beneficial case for us as traders if that were to play out, because it's extremely clear when you get an equilibrium on a long-term time frame giving us a clear break. So just the setup here for IWM with our high, low the pullback from December, our lower high has now been set, and we're looking for a monthly higher low compared to 125.81. If we see a ramp up in bear volume on the weekly time frame, then the odds that we're going to break that monthly support level will increase. But look at the volume, it's dropping off. I don't see that, and I don't see the odds very high that we're going to see the bears dump another 15% to break that support level after we have already seen a pretty solid pullback from the high. So in my opinion, if we're going to break bearish on these monthly timeframes, it would look something like this, with a pullback and a higher low found, a bounce with a lower high, and then a bear break of support. I don't think it has enough of, again, that fear, that significant unknown that will allow for just a straight dump to monthly lower lows, and we're not seeing the volume that would show that as the likely scenario as well. So IWM weekly time frame took out some support, not on increasing bear volume, which is notable. There's a lack of support in this area, which means RSI levels can get more extended than normal. So we have to keep that in mind as well. Looking at it on the daily time frame, we have the clear lower highs to be watching, just like on the S&P 500. On the way down, every little bounce attempt, just a lower high, and that's our benchmark. We can always just say, as long as we're under this level, it's just a lower high and bulls are not proving anything. Daily RSI is on the verge of oversold, and anything under 149.58 is just a daily lower high. QQQ. So just like the S&P 500, we headed to a V-shaped recovery to new all-time highs, which was not the most likely scenario from the December dump, but again, very impressive for the tech sector bulls, and that's in large part the reason that the S&P 500 did it as well. But anything above 143.46 is just a monthly higher low, keeping the bulls fairly in control. People talk about, when are we in a bear market? For me personally, change the monthly trend, confirm a monthly downtrend, then we're in a bear market. And that's not going to happen in the immediate future, in my opinion. Weekly volume is dropping off for QQQ. Next key support is 169.34. Break that level and we enter the area with a lack of support. So just like SPY 272, for QQQ, it's lining up in the 169s. So I'm looking for a monthly higher low to form. Again, whether it's at 169 or whether it's at 158, I can't say. But we're just taking it one day at a time and getting more information. And the pullback will be anticipated to be more significant if there is significant bear volume. And at this point, the daily time frame has some spikes in bear volume, but we're not seeing it on the weekly time frame, as the volume is under the 20-week average the last 2 weeks that it has been bearish. XLF, so monthly time frame, I'm looking at 29.07 as a resistance. We dumped to the December low, we bounced and formed a lower high, and now we're looking for a monthly higher low compared to 22.05 for a tightening range, just like everybody else. Weekly time frame has a support level at 28.05 to be watching. We're still in a weekly uptrend. We have not lost the weekly higher low pattern. We could form a weekly equilibrium inside a monthly equilibrium. If we hold 25.08, we would look for a bounce and form a lower high compared to 28.13. If that were to break bearish, then we'd look for the monthly equilibrium to keep playing out. And if it were to break bullish, that would certainly be notable and a bit of a surprise. But as we're heading down to this support, again, volume. Are the bears showing us anything with volume? And for me, they're just not. Look at the volume on the dump in October and December. Over the 20-week average volume, we almost doubled it. We saw a third more than it, clearly more than it, almost doubled it again. That's high bear volume showing a flush. And here, it's just not. It's just declining volume, and it is not even close to the 20-week average. 20-week average was 246 million, and we had 164 million. So 2/3 of the 20-week average volume on this big red day. Not notable for me, or big red week. Getting all these time frames mixed up. But it's important to start with the longer term time frame and zoom in from there to get a complete picture of what we're looking at. So as far as XLF goes, we closed weak. Daily RSI on the verge of oversold. Everybody highly correlated with where their RSI levels stand on these daily time frames. And we're looking at anything under 2671 as just a lower high on the daily time frame. Bulls have work to do to change some trends. XBI on the monthly time frame is that equilibrium. All-time high, low of the December dump, lower high, and here we are pulling back, looking for a higher low compared to 64.38. Again, the amount of space the bulls have to work with, we would have to see a dump of over 19% for a bear break on the monthly time frame. And this is coming after 2 months, we've already pulled back 16%. So to see an additional 19% to drop straight to a lower low is not a likely scenario, in my opinion. Weekly time frame, bear volume not standing out. Clearly the bears have had control, absolutely, not going to dispute that, but the volume is telling me that monthly higher lows are most likely. Daily time frame, anything under 83.77 is just a lower high, and we are breaking some nearby support levels. We're looking down from here at 78.60, and then there's a gap down at 75.24 to be watching after that. Daily RSI, not as beat up as other names, but it will be heading down towards oversold if we continue to see weakness. XLV, monthly equilibrium, playing out. So far we've got XLF and XLV, two of the top 3 most important holdings in SPY in monthly equilibriums, and QQQ is broke bullish, and it's looking for a monthly higher low. So that is that. I have nothing else to say on that. So we've got our high, low of December, lower high is set, and now the question is, can we form a higher low? That volume's notable. Don't forget we had mixed in there that big dump in the healthcare sector when Bernie was getting some attention and the healthcare sector saw some risk, perhaps in the presidential election. But bottom line is we are still in an equilibrium as long as 80.61 holds. Looking at that volume, if I were to choose anybody that has an odds of breaking to a lower low on the monthly time frame, it would be the healthcare sector. And you could even call this an inverse, not an inverse, a regular old head and shoulders pattern with a left shoulder, a head, and a right shoulder, and breaking 80.61 would confirm that we're now in a downtrend because we're going from higher lows and higher highs to a lower high, and that would be a lower low if that broke. So looking at on the weekly time frame, a lot of that's bull volume. So we definitely have to take that into account as well on these weekly candlesticks where the open is at the low of the candlestick and the close is at the high. So keep in mind that the monthly time frame showing us all that volume, a lot of that is bull volume here. Definitely some bear volume spikes, but right now we're still watching this tightening daily pattern. We broke it on Friday, but we only broke it by something like 0.07%, which doesn't count for me. That's a triple bottom now. So we are still in this equilibrium. We've been watching it for the 2-day time frame just for some clarity to keep things smooth. We have the low of the dump, the high of the bounce. There's our higher low, which is our triple bottom. We had a lower high, and the bulls are just clinging to this support. Best case scenario for the bulls is a break of 87.69 this week and to see us make progress back into this tightening equilibrium. If we drop down and clearly break 86.83 from here, then that will increase the odds that we are pulling back further on the monthly time frame. But again, looking at this 2-day chart and all that volume on the monthly time frame, the vast majority of that is bull volume in my opinion. So taking that into account, but it's all about the short-term pattern, and then from there, how this pattern breaks, which certainly is favoring the bears at this point because we're on the verge of that support. How that pattern breaks will dictate what we anticipate is the most likely scenario, and if it breaks, we're heading back down to 84.65. And last, we got the volatility index. So looking at the monthly time frame here, I see an equilibrium as well. I've got the high of the spike, and again, that spike happened because the move was so extreme. The fear came out of nowhere. Stop losses were triggered very quickly. Didn't really have a why. I remember talking to my dad about it. My dad is aware of the financial world, but only as much as, you know, a baby boomer that has their retirement in the market keeps an eye on things, not actively managing his stuff, but certainly knows what's going on. And the whole time during the December dump, he was saying, you know, what is the reason for this? I can't find any reason. It's just the market being the market. And he's the kind of guy that just holds no matter what. And it's served him very well over the last 30 years that he's been doing that. So it's a different scenario now that there is a reason and there is a narrative and there is something that people can point to. And like I said at the beginning, it's almost as if that alleviates things a little bit and makes them not as extreme because there's a reason. And I know that's a little bit counterintuitive, but that's just the way it seems to me. And I'm going to have to think on that a bit more because that's just happening in my brain as I'm making the video now. So high, low, lower high, higher low, and now we're looking for a lower high compared to 36.2. And this monthly pattern could continue to tighten into Q4 2019, which would be in line with what we're looking for equilibriums in the other names as well. So anything under 362 will just be a monthly lower high. Let's say we go up another 2 months even, June, July. So 2 more candlesticks in there, then we pull back another 2 months, August, September, and again, this is just, I would never place any trades based on these guesses because all they are is guesses, and we get way more information every single day that goes by. So I would be looking for a tightening monthly range on VIX into Q4 2019, and then a break of it would be very notable. Let's see if we have anything as an example. And I would say the example we could look at, no, nothing really forming an equilibrium. We definitely had a tightening range back here in 2011, and then we just slowly faded as the market melted up. So anyways, that's what I'm watching. Longer term time frames first have my attention, and then from there, zooming in, the bears still have absolute control in the short term. We're watching daily RSI levels getting close to oversold. We're watching, of course, what's coming out of China on Sunday and how the market reacts to it. And we will be looking for short-term oversold bounces, just forming daily lower highs. Once we get a real bounce with some volume behind it, we'll keep an eye out for the potential of any daily trend changes, but of course that's not on our radar at this point. What's on our radar is when is our temporary bottom going to be hit? Oil is certainly a big factor in that as well, and how big is the bounce? Because how big the bounce is tells us whether it's more likely that it's just a lower high and we're heading to lower lows, or whether the bounce is significant enough that the bulls can make an attempt at changing the daily trend. I hope you have a good weekend. We're going to look at some garden here, do some good things out there, and I hope to see you soon. Checking in with a garden update, we've got these little sour gherkin cucumbers going wild. Pretty much twice a day I have to adjust where they're climbing and grabbing as they get higher and higher, and I'm gonna run out of space. Sending them along the side here, and you can see their little flowers and little cucumbers getting ready to go. Then we have the big boys over here climbing up. Got some cucumber production. Where are we? That big boy's growing real fast every day. And they're sending their own arms outward, just letting them go wherever at this point. And there's a praying mantis that's been living here. I'll keep an eye out for them and try and get them. Tomatoes still flowering. Don't see any little tomatoes forming yet. Seems like the brandywine, which are these wider leaves, they seem more resistant to blight, but cutting those lower branches off definitely slowed everything down. And we got the basil still going. Got some zucchinis. And cilantro's flowering, so that's on its way out. But I like eating a little cilantro every day. Wildflowers still going. Now we got the potatoes from the compost pile, and some squash coming in from the compost pile as well. Not sure what varieties. Potatoes are huge, so I've hilled them up a couple times just by adding dirt to their base. Only one variety has flowered yet, and then they'll just die off eventually, and then you dig up the potatoes. Pepper flowers. This is some kind of spicy pepper. This is a butternut squash that's starting to expand. You can see the little baby butternut. And we got eggplant flower. And a lot of flea beetles have been eating this. You can see the leaves, these little dots. That's just little flea beetles taking tiny bites. Chard still doing its thing. Beans flowering. So they'll start producing, and one of these little guys, you'd be surprised how many string beans one of these will produce. Peas, they'll probably start flowering in the next week, but they're still climbing up. And every day I just have to come out here and help them hook on. Another winter squash, and the kale and the collard greens are going on. And that fan, I don't know if you've seen the YouTube video, but for mosquitoes, you mix warm water, yeast, and sugar, and that puts off CO2, which is what mosquitoes see or smell to bite us. And then the fan sucks them to the back. And so I come every morning and rescue the guys who are not mosquitoes.